Morning, everybody. Just waiting to see, make sure we got everybody signing up. That's coming in now, so just waiting for the everybody to get settled, and then we'll start. Nice to see so many of you joining us this morning. Okay, I think we said we start at 11, so we might as well kick off. So, yeah, thank you everybody for joining us this morning. This conversation about the new charge that's coming in from the 1st of March, which is going to affect anybody in the construction industry. I will hand over to Adam in a minute, but you'll notice down the bottom there's a Q&A section. If anybody's got any questions as we go through, if you'd like to put them on the Q&A, then when Adam's finished doing his presentation, we'll have a look at the questions and I'll go through them with Adam, see if we can answer most of your queries. So, yep, I'll hand over to Adam and he can get us on our way. Thanks, Adam.
Thank you very much, Sally, and good morning, everybody. Today's a short presentation on the forthcoming construction industry reverse charge, which is coming in on the 1st of March. Today we'll be going through a few areas of the construction industry reverse charge. I'll be giving you some background information, and we'll be covering what services are affected by the new reverse charge, any accepted services. We'll be looking at an example of an invoice going from a supplier to a recipient under the construction industry reverse charge scheme. We'll be talking about the cash flow impact of the reverse charge on buyers and sellers of affected services. And finally, we'll be talking about what software houses are doing in terms of enabling people affected by the reverse charge to record their sales and purchases correctly. So some background basically on the reverse charge. It's with effect from the 1st of March. The reverse charge will apply to certain services, construction services, between VAT registered businesses, and these are referred to as specified services. It applies where payments are required to be reported through the construction industry scheme, i.e. the income tax construction industry scheme, and it's mainly aimed at counter avoidance. There is a perception within HMRC that in the construction industry, people a supplier is charging VAT, a customer is claiming the VAT, but then the supplier is disappearing without paying the VAT that they charged over to HMRC. So by having the customer responsible for both the accounting and the reclaiming of the VAT, there is a perceived blockage of that particular avoidance arrangement. So as mentioned, under the new arrangements, the customer will be liable to account for that under a reverse charge arrangement in respect of those services rather than the supplier. The new rules apply only to businesses that are supplying their construction services to other businesses in the supply chain. It does not apply to the end user. VAT registered businesses that receive supplies of these services from another VAT registered business will be required to account for the VAT through its VAT return instead of paying the VAT to the customer. It will be able to reclaim this VAT as input tax subject to the normal rules, and so in most circumstances the net result to the customer will be nil. The supplier will still need to issue a VAT invoice but that invoice then needs to indicate that the suppliers are subject to the reverse charge, and that is therefore the customer's responsibility to account for the VAT. So we'll start with what services are actually affected. There's a long list issued by HMRC, which is not exhaustive, and HMRC have accepted that in the first 6 months of operation of this, there's going to be queries and grey areas where people are unsure as to whether what they're doing falls within the reverse charge or not. Within that 6 months, HMRC have offered, said they'll adopt a softy approach to, for want of a better phrase, enforcement, and will attempt to guide people and get them on on the straight and narrow within the 6-month period. But for the time being, the type of services affected by the change are, for example, the construction, alteration, repair, extension, demolition or dismantling of buildings or structures, whether these are permanent or not, and these include offshore installations. Construction, operation, repair or demolition of any works forming part of the land, including the walls, roadworks, power lines, electronic communications, apparatus, items such as runways, docks and harbours, inland waterways, pipelines, reservoirs. The list is quite extensive. The installation of any building of systems for heating, lighting, air conditioning, ventilation, power supply, drainage and the like. Internal cleaning of buildings and structures so far as carried out in the course of construction, alteration or repair, so ancillary services of that nature. Painting and decorating to the internal and external surfaces as part of the course of construction, and any services which are integral to or preparatory to any of the services described above. This could include tunnelling and boring, site clearance, scaffolding, site restoration, landscaping, and the provision of roadways and other access works. The reverse charge does apply to the provision of goods. For example, one of those examples would be scaffolding, but only when it is part of a service. So with the example of scaffolding, if you provide and erect scaffolding for the purposes of a construction job, that falls within the reverse charge. But if you just drop scaffolding off, i.e. supply goods and no services, that would not fall within the construction reverse charge. So there's quite an extensive list of things which are caught by it, but the general rule, I think, is that it services in the course of actually constructing a building and the integral parts of that building. Just providing raw materials for the construction of the building does not count, and services to the end user, either the person who's going to occupy the building or use the building for their own use, also does not count. The HMRC have specified a number of exempted or accepted services, things that they are saying definitely do not fall within the reverse charge mechanism. And these are some ones which, some of these are rather eclectic, some of them are more general. Some of the more eclectic ones are, for example, the drilling for extraction of natural oil or gas, extraction of minerals, underground or surface working for the extraction of minerals and tunnelling, boring or construction of underground works, manufacture of building or engineering components or equipment, materials or plant. That's where they're supplied just by themselves. Machinery for delivery to site. Manufacture of components for systems, heating, lighting, air conditioning, ventilation, power supply. As I mentioned before, these are excluded where they're merely provided to the site, where they're delivered as goods to the site. Where they form part of the construction service, i.e. where you, for want of a better phrase, supply and install these goods onto a building site, then that would fall within the reverse charge. Other exclusions include professional work of architects or surveyors or consultants, engineering, interior and exterior decoration, or in the laying out of landscapes, installation or repair of artistic works, sculptures, murals and the like. If Banksy does something on the side of the building, that will, I'm afraid, not count. Sign writing and erecting, installing and repairing of signboards and advertisements, installation of seating, blinds and shutters, and finally in the installation of security systems such as burglar alarms, closed circuit television and public address systems. Okay, so we're going to go on to an example now of an invoice, basically where Company A, which is the supplier, provides £1,000 of specified services to Company B. Company A will in this instance issue an invoice to Company B for £1,000 plus £200 but the company specifies on the invoice that the services are subject to the Construction Industry Reverse Charge scheme, and that company B is responsible for paying the VAT over to HMRC. Company A then records sales of £1,000 on its VAT return, but does not declare £200 as output VAT. Instead, Company B pays £1,000 to Company A, but does not pay the £200 of VAT. Company P declares the £200 to HMRC as output VAT in box 1, and as mentioned before, reclaims the VAT in box 4, subject to the normal rules on its next return. Company B then reports purchases of £1,000 only. At this stage, it's not clear whether there's going to be a second box on the VAT return forms for specified supplies of this nature, a bit like there were before Brexit, where acquisition VAT was recorded in box 2 of the VAT return rather than box 1. So at this point, it's being assumed that Company B would pay the £200 in box 1 of its VAT return and reclaim it in box 4. Let's move on and just talk about cash flow for a minute. This system obviously means that VAT will be passing from person to person in a different way and at different times. As such, from a cash flow perspective, it's quite good for the buyers of specified services, because rather than having to pay VAT to the seller on the date of the invoice and then not being able to reclaim that VAT until such time as the buyer submits his VAT return, instead the buyer pays the VAT on its return, reclaims it at the same time, so it has zero cash flow effect from the VAT. So that is an improvement from the buyer's perspective from a cash flow. In turn, it's not so good for the seller's perspective, because before they would receive the VAT from the buyer upon the date of the invoice or within the payment terms of the invoice, but then wouldn't have to pay that VAT over to HMRC until the end of that month or quarter when it submitted its VAT return. So the sellers are now experiencing a cash flow shortfall of the VAT that they may have used to fund, or at least to partly fund their activities during the course of that VAT month or quarter. As a result of this, some businesses are thinking about moving to or from monthly returns because of the effect that this is having on their cash flow, and it's something that businesses should consider just if it is causing them problems. Finally, move on to just what software houses are doing. I mean, obviously, we have a responsibility with making tax digital and other responsibilities to submit returns in a certain way these days. And so making manual adjustments on returns is less and less of an option, especially for businesses who are operating making tax digital, for example. So what's happening in the field of IT is that Xero and Sage, for example, are adding codes to their systems, whereby if you code it as a reverse charge service, it will make the appropriate adjustments automatically for you, whether you're a buyer or a seller. Other software providers we've heard are offering add-ons, but are charging for this service. So that's maybe not so good, but at least they're up to speed with what's going on and are making sure the systems are going to be compliant come 1st of March. What we have noticed is that because the construction industry reverse charge is very similar to other reverse charges, a coding can be used that may already exist. For example, if you have a code on your system for imported services from outside the EU, if you coded your construction industry reverse charge payment in that manner, then it would automatically add the VAT to box 4 and claim it, to box 1 and claim it in box 4. So it may be that the coding already exists under a different description because this process has been done before for other purposes. So I'll be happy to sit down as a one-to-one with people and go through that and see how we make sure that it works properly come 1st of March, if the appropriate coding hasn't been provided by your software provider. So finally, how can we help? I mean, this is a new requirement. Like I said before, HMRC have said they're going to operate a softly approach in the first 6 months to enable people to get to know the systems, get to know the processes, get used to them. And like I said at the top of this webinar, there will always be areas where people are not sure whether it's going to fall within the reverse charge or not, because HMRC haven't covered off every single box. It's almost impossible to do so. So the aim of the 6-month period is to address those issues and get them right going forward. We're here to help you with that situation, that situation, and indeed in any other way that this is affecting you. We can assist sellers in making sure that their services, where their services fall within the reverse charge, they don't account for the VAT and they add the appropriate wording to their invoicing. We can assist buyers to make sure that they declare the VAT in the proper way and claim it. And we're going to ensure both sides cooperate with each other in identifying what services do and don't fall within the reverse charge. So the motto, as ever, is be prepared. This is coming in, well, a week's time. I'm sure many of you have already started looking at how you're going to implement your systems or change your systems to cope with this. We're here to help you do that. So I'd like to wind up on that and say thank you very much for listening. As Sally said, if there's any questions, if you've got any questions, please feel free to type them out or to ask them verbally. I think that's probably a facility. But please feel free to put your questions in writing now, and we'll attempt to go through them.
Lovely, Adam, thank you. I've got a couple of questions that have sort of come to me whilst you've been talking, and I wonder whether we could perhaps go through some of those.
Absolutely.
So this phrase that needs to be included on the invoice, is there a specific wording about the fact that it's in the reverse charge system?
There are some recommended pieces of wording, but basically what you have to get across is that the services fall within the construction industry reverse charge, and it's the responsibility of the buyer to account for those.
Right.
To account for the VAT on it. There is a specific VAT section of the VAT Act that this falls within, which you can quote if you want, but it's not essential.
Okay, so as long as the message is clear, it's not actual specific wording.
Absolutely.
Okay, and obviously for those that are employing subcontractors, they've got to look out for that message, because then they will have some that will come from non-VAT registered suppliers and some that will be VAT registered suppliers, and obviously they will need to deal with each one differently.
Yes, I mean, the reverse charge only applies to services between VAT registered businesses. So if you've got a message from a non-VAT registered supplier, then that's an erroneous message. But then the invoice wouldn't have a VAT number on it unless they're up to something, as it were. So it would be the case that you know, if you've got an invoice that says you have to account for the VAT, do the normal checks on that invoice. Is it a valid VAT invoice? Does it have a VAT number on it? Does that VAT number look reasonable? Have you dealt with that customer before? A lot of these things are going to be affect existing relationships and not new ones. So hopefully, you know, that there will be an amount of information on the static data, for example, which will enable you to establish that you have a validly VAT registered person.
Okay, yeah, good. So we've got a couple of questions coming through. So one question is, do we know if QuickBooks has an addition? Because you mentioned Xero and Sage, but a lot of our clients use QuickBooks, QuickBooks Online. I believe there is a code, but as Adam said, we can always use the one that was there for the importing of services. So I'm sure there's a way around it, even if it's not immediately available. So we can certainly deal with that, and we'll let everybody know that's been on here whether there is a code on QuickBooks. I'm afraid I can't answer that straight away.
QuickBooks are one of the ones, Sally, that I think are charging for the add-on.
Okay.
So you know, that it might not be very much. It might only be a token amount, but what I've heard is that they're charging for an add-on facility. So it's a situation like that where if you have the T code, sorry, not T code, that's Sage, but if you have the code for an imported service, then that would perform the same function. But we can always run a couple of sample transactions through a client system if you want, and just check that it's doing what they need it to do.
Yeah.
So thank you for that, Jenny.
I was surprised that you said about raising an invoice that's actually got the VAT shown on it, because I assumed that it would be like in your scenario, you had company A that would raise an invoice for £1,000 and wouldn't show the VAT separately. They'd just put that message on. Because if they're raising an invoice in their accounting software for £1,000 plus £200 of VAT, whatever code they use, it will still show as £1,200 shown as payable, receivable. But they're never.
Well, I think, yeah, it's something. It's one of these things that I think HMRC are going to have to iron out in the course of the next 6 months. But they are saying that when a supplier raises an invoice, it should show the VAT,
Right.
but they shouldn't account for it. So, where invoices are generated automatically, that's going to be an interesting conundrum. And I will see, if HMRC provides any further guidance on that.
Okay. So we've got a construction company supplying services to a VAT registered company who does not fall into CIS. So if this, it's all about the services, isn't it? If the services don't fall within the CIS scheme as defined by the income tax rules, then none of this applies. You would still add VAT on your invoice in the normal way, wouldn't you?
Ordinarily, yes. I mean, they have set this up to follow the CIS, so that's your first port of call. But I would, Lizzie, look at what services are being provided and have a look if it falls within the list that we described earlier. And if it does fall within the list, then we should at least have a word with HMRC and say, this is one of those grey areas. It falls within your description, but it's not within CIS. Because there are some exceptions where things fall within CIS, for example, but don't qualify for the VAT reverse charge. So it is built to follow the CIS rules or the CIS coverage, but it's not a 100% black or white situation in that regard. So, Lizzie, I would look at the services that you're providing. If they are construction alteration services and the customer's VAT registered, as you say, then it may well be that they do.
I didn't realise that there was differences. I thought they mirrored each other, and in fact, they'd used the definitions from the CIS scheme. Apparently not. Then no.
It's 99% there, Sally, but there are, as with a lot of these things, there are going to be a few things that fall by the wayside, and that's why they're using this 6-month period to iron out those wrinkles, as it were.
Okay. Yeah. Then there's a question about scaffolding. I know scaffolding is always an issue, isn't it, with CIS generally? So yeah. I think you said that if they supply the scaffolding and that's all they do, then it's not within the scheme at all. But if they supply and fit, then it falls completely in the scheme. I think the query here is, scaffolders quite often split their invoices, don't they, and have labour and then the hire of the scaffolding. How does that work?
Well, ordinarily that will mean that both items fall within the reverse charge. So there's a de minimis rule if you provide what you would describe that as a mixed supply, and there's more than 5% of it falls in the CIS, then the whole lot of it will. So in that instance, the supply and install of the scaffolding server would be subject to the reverse charge. Jenny, further information? Yes, you can get further information on the HMRC website. As part of the follow-up email, I can send a link to the technical notes if you wish. But obviously as well, we're here to give you any help that you need. So hopefully that we'll be able to get you up and running. And Vince, why does HMRC not sort these issues out before they go live? Well, I will be a little bit defensive of them on that one, Vince. I mean, it's always the case that no matter what new rule comes out, you try and do a catch-all situation, but it's not always the case that you catch all. I think they've captured most things, and as Sally has said, in 99% of the time, if it falls within the CIS scheme, then it will fall within the VAT reverse charge. But there will always be odd situations where it doesn't. I had a query yesterday about people on the gross arrangement for CIS, for example, which means I think that if they're on a gross arrangement that they don't fall within the income tax CIS, but their services would still fall within the construction alteration repair rules. So that's one example of where it's more than likely that they will still fall within the construction industry reverse charge, even if they're outside the CIS because of their gross status. So to be fair, Vince, yeah, you're right, but there's always going to be these little grey areas or cracks that get covered when things start rolling. Don't forget, VAT was introduced in this country in 1973, and people are still arguing in the courts over what's what.
So they can't iron out everything before they go live, I suppose.
And even if they do, Sally, somebody will say, well, we don't agree with this, we don't agree with that. And as with everything in tax law, VAT law, every type of law, court cases will change the precedent of things. They will change the treatment of things. We've had it so many times. Every month I'll give you a synopsis of 6 or 7 different cases in the UK and European courts, even though we're not governed by Europe anymore, which have an effect on the VAT treatment of those particular services. And all of those things, HMRC had one opinion beforehand, and they'll either win or they'll lose. It's
so difficult though, isn't it, for businesses that are just trying to get by and do a day-to-day job to actually do everything right. For the best will in the world, mistakes will be made, and I hope they really are lenient in this first 6 months while people are sort of getting to grips with it, really, because it's going to be. They
have promised to be, and the situation in this is that 99 times out of 100 it will be a no revenue loss situation. If somebody gets it wrong, it means that the supplier was accounted for the VAT, whereas the seller should have, or vice versa. But the aim of this, as I mentioned at the outset, is to try and counter avoidance, where the buyer reclaims the VAT, but the seller disappears without accounting for it. And so, for instances where that hasn't happened, there's going to be there's no revenue loss, and they will take a softly approach.
Okay.
So, what type of flooring supplied? Sorry, Trevor. Thank you. Flooring supplied and fitting forward in the situation. It would be, Trevor. It would be flooring that falls within the normal definition of constructing a building. So floorboards. If you're putting a floor in, then that would fall within the situation, because that's part of the fabric of the building. If you're putting in carpets and the like, or laminates, that probably wouldn't. In fact, that wouldn't.
What about so if this whole thing about supply and fit, really, so if we've got a joinery that has to install a new staircase into a new build, presumably if they just supply the staircase, then it won't apply, but if they actually go and install it in the building, then it will apply. Is that right?
Yes, that's precisely the point, Sally. This applies to services. And services, the provision of goods can be an integral part of services. So supply and install is probably the best way of describing this. If you supply and install something, you fall within the scheme. If you just supply something, you don't. And if you just install something, you do.
Right, okay.
It's the services, not the goods, but the goods can be part of the service. I read the situation the other day. It was a kitchen installer. But they were providing the kitchen, but having subcontractors installing it. But the fact that the subcontractors build them, and then they build the developer for the supply and the install, meant it fell within the reverse charge.
Yeah. And we need to be careful here about the idea of subcontractors and end consumers as well. So if it is somebody that's working as a subcontractor, isn't it, that this falls on? So if you're working as a contractor for an end user that's not VAT registered, then you would just be applying VAT in the normal way.
That is correct. Yes.
Yeah. I think sometimes that can get confusing.
Yeah, I mean there are one or two other accepted suppliers that that you've said supplies to the end user, the person who's going to occupy the building. Yeah. Obviously supplies that are zero rated aren't subject to it because there's no VAT to apply for. Supplies between a landlord and a tenant wouldn't fall within this because that's not part of a construction of a building, even if it's an alteration or repair. and connect supplies between connected parties don't fall with it either. So if you have a main contractor with a subcontractor who's a subsidiary company, then that probably wouldn't apply then.
Okay. Okay.
Okay, Jenny, sorry, just confirming, if subcontractor bills us, the contractor, 100, we pay the £200 to HMRC, and when we claim it, we then charge our customer £1,000 plus VAT. Jenny, that's absolutely correct, assuming your customer isn't another contractor in the supply chain. If your customer is the end user, then yes, that's absolutely right.
Yeah. An interesting point that you brought up about changing the VAT returns that people do as well. I always understood that monthly VAT returns were only available for repayment cases, but that seems to have changed. I don't know how recently, but it is now possible, isn't it, to register to do monthly VAT returns even if you're making payments to the revenue?
Yes, you can. I mean, it's the logic about registering for monthly returns is questionable if you're making payments to the revenue, because obviously it's bad for you and good for them. If you're of a certain size, then payments on account are required anyway. So it could be that you're making monthly payments anyway. But if it's not happened very often, but it's worth covering off. I think if the change in the system means that you're no longer in a repayment situation, which it might be, then and you are currently on monthly returns, it's worth considering moving to quarterly returns. Similarly, if the change in the situation puts you in a repayment situation, which it might well do, if you're buying these services, and then it could be that you want to consider going on to monthly returns. I think it would have to have a pretty dramatic effect on your cash flow in order for you to consider those changes, but it is a change that should be considered.
Well, I suppose that is quite feasible, isn't it? With a subcontractor who always works for contractors, he's not going to have any output VAT. So he's only going to have input VAT.
That's right.
And may want to go on to monthly returns, yeah.
Precisely, yeah.
But even, I know you say it's bad, because you've got to be paying your VAT more regularly, but actually from a budgeting point of view, it's easier to deal with VAT monthly than it is quarterly. So it's not always, I realise the money's coming out of your bank quicker, but sometimes that's better rather than thinking it's your money and then having to find 3 months worth at the end of 3 months. So.
Absolutely. So it's just a consideration. It's not a legal requirement, but it's just something clients, you can consider in the event that they see a dramatic change in their cash flow. Because it is human nature. If you've got money in your bank account to use it to fund your activities, and and then other money that's in your bank account at the end of the quarter or VAT return, you pay your VAT with, and so if that causes issues, then the frequency of your returns is something to consider. Yeah.
Okay. I've got another question from Lizzie.
Okay, Lizzie, hi. Will mixed invoices need to be separated? E.g., we have a CIS registered subbies who are VAT registered. Sometimes we will receive invoices for a month's work, which will include work in customers' houses and work completed on construction of our premises. Okay, so Lizzie, I'm assuming here that you're saying that in this situation, some of the work will be for an end user and some of the work won't be. I think that's what you're saying there. So yeah, for a month's work, which will include work in customers' houses and work completed on construction of our premises. So yes, in some instances, thank you, yeah. In those instances, yes, it would be a separate situation. Part of it would be subject to the reverse charge, and part of it wouldn't, and some apportionment would be needed there. How you apportion it, well, it could be on the hours that they've done or whatever your arrangement. You might have, I would imagine, if they're working on different buildings, they'll have different prices or different costs for each of those buildings just anyway. So they would reverse charge one and not reverse charge the other.
So the onus is on the subcontractor to get it right, because they've got to issue 2 different invoices, or I mean, if they just issue one invoice and just show the VAT in total, but just put this sort of catch-all sentence on it, it's left for the contractor in the middle, isn't it, to work out whether they should be reverse charging all of the VAT or some of it.
Yes, it's the usual HMRC have said the usual caveats, and that's that customers should exercise reasonable judgment in whether what they're being told by their supplier is true or not. Is it, like I said before, is that VAT number a real one, or are the services falling within the reverse charge? But I think there should be a reasonable amount of clarity between buyer and seller as to the nature of the services that are being provided. And so I would hope, in normal circumstances, just as part of the interaction between buyer and seller, that they will have an understanding between themselves as to whether what's being done falls within the reverse charge or doesn't, or the extent to which it does.
I think I'm with Lizzie on this. I would probably want my subby to do 2 separate invoices. And
yeah, absolutely. Yeah, I would ask for that as well.
Okay, so
Richard, as a developer selling a house to a private individual and employing subcontractors to do various works, am I an end user in this scheme? Richard, no, you're not. It's the private individual who is the end user in that scheme. However, if you're building and selling houses, then that's 0 rated. So I wonder whether the contractors working for you would be applying VAT to their services or not.
Oh, that's a good point. So if they're brand new houses, then it would all be 0 rated anyway. So
yeah, services in the course of construction of a new house should usually be 0 rated.
So it rather becomes a moot point then, really.
Potentially, yes. I mean, 0 rated services are specifically excluded for the obvious reason that there's no VAT to apply for. There's no VAT to account for. So Lizzie again, sorry, what resources would you direct subcontractors to? What resources? Some of them aren't the best at getting documentation right, okay? Even getting an invoice can be a challenge at times. Would you recommend HMRC docs, or are you producing your own guidance? Lizzie, I'm assuming here you're going to be the customer, i.e. the buyer of the subcontractor services. I would look at the reality of the situation. What have you asked them to do? What have you contracted with them to provide for you? If they don't issue with an invoice saying that this is subject to the reverse charge, then you have not been in receipt of such an invoice, and therefore are not usually required to account for all the VAT yourself. However, whilst I take your point about getting information out of, or even an invoice out of a contractor, at times can be challenging. If you haven't got an invoice, then you've no requirement to pay them anything. So if they want their money, then they're going to have to give you an invoice. So I would, again, as mentioned before, I would hope that between yourself and the subcontractor, you can agree on whether these services fall within the reverse charge or not. But if not, yes, you can refer back to HMRC or refer back to Sally and myself, and we'll give you whatever guidance you need.
It is a case where the contractor's sort of stuck in the middle trying to educate the subbies, isn't it?
In a sense, yes. And we have prepared draft notes, letters for contractors to send to subcontractors, and indeed subcontractors to send up to contractors, just saying that, in our opinion, the services fall within the reverse charge, and this is what you have to do. We can make those available to clients if that's a help.
Yeah, I think that might be useful. So we're recording this webinar, and I can send a recording to everybody that's attending, and perhaps those sort of notes could also accompany that, so that we, give them some feedback that might be useful to pass on.
Sure.
Lovely. Well, we seem to have run out of questions. Is there anybody else that has anything else that they want to ask while you've got Adam here already? I think it's been very useful, Adam. Thank you.
Thank you.
It's one of those subjects where, the theory is a bit confusing. Then you think you got it straight, and then other things come out of the woodwork that throw it into a cocked hat again. So it's, well, I suppose, as you say, it will become clearer as it goes through the courts. But I do.
Well, yeah, I mean, that was just an example. And hopefully there won't be too many issues with these that are going through courts, but it'll just be a question of, these little grey areas being ironed out in the course of time. Like I mentioned before, tax has been around since the Napoleonic Wars. VAT has been around since 1973. People are still arguing about it in the courts and changing the treatment as a result of court rulings, or as a result of revisions in HMRC practice, or whatever, or as a result of just the technology and what have you moving on. we've got examples now in the courts, for example, of a totally different subject to this, but books are zero rated for VAT. But since the internet's come along, most books are electronic. So are electronic books zero rated or not? Because zero rated covers printed matter, because printed matter is how books were always produced when VAT was introduced in 1973. Nobody had any concept of the internet then. So we have to catch up with these things, and it's not always an entirely smooth process.
So I would say to that is make sure that anybody signs up if you're not getting our monthly newsletters, that make sure that you let us have your email address and we can send those through, because we include your sort of VAT news, don't we, on the newsletters every month. So anything that you're finding out from dealing with the revenue or listening to the court's decisions, then we can pass on to clients, so that just keep an eye on it, see if anything big comes up.
Absolutely.
Okay. Well, I think we'll draw a close there. Thank you very much for attending the webinar. I hope you find it was useful. As I say, we will be, we have recorded it and it will be available. So I will be contacting everybody that's attended, and we can provide that information. And do contact either me at the office or any of the contacts that you've got in our office, or Adam.
There's my details. Sorry.
Lovely. Yeah, there's Adam. So you can contact Adam direct or come to us, whichever partner deals with your affairs, and we can try and help you through it.
Absolutely.
Okay. Well,
thank you very much for everyone.
Yeah. I'll end the meeting there. Thank you.